Seabridge Gold represents a structural entity within the global mining industry, operating under a specialized resource bank model. This strategy prioritizes the acquisition and development of gold and copper deposits during periods of market cyclicality to maximize the growth of in-ground metal reserves and resources on a per-share basis. Unlike traditional mining firms that prioritize immediate production and cash flow, the value proposition of Seabridge is centered on the systematic de-risking of Tier 1 assets through geological expansion, environmental permitting, and advanced engineering. This approach allows the firm to provide shareholders with leverage to the underlying metal prices without the operational complexities and capital risks associated with active mine management. The core of this strategy is the Kerr-Sulphurets-Mitchell project in British Columbia, which has transitioned from a theoretical exploration concept into a permitted engineering advanced asset. In parallel, the company maintains a diverse portfolio of secondary assets, including the Courageous Lake Project in the Northwest Territories, the Iskut Project, and the Snowstorm and Three Aces exploration targets. The execution of this model requires a financing strategy that balances capital requirements for multi-million-dollar work programs against the goal of minimizing share dilution. As of late 2025, the company has entered a stage characterized by the finalization of a bankable feasibility study for the Kerr-Sulphurets-Mitchell asset and a reorganization of its portfolio through the spinout of Valor Gold.
The flagship asset, Kerr-Sulphurets-Mitchell, KSM. The KSM project is the defining asset of Seabridge Gold's portfolio and is recognized as the world's largest undeveloped gold project by resources. Located in the Golden Triangle region of British Columbia, the project encompasses 5 major porphyry deposits: Mitchell, East Mitchell, Kerr, Sulphurets, and Ironcap. The scale of the project is immense, with a total contained gold inventory comprising 88.3 million ounces in the measured and indicated categories, plus an additional 71.5 million ounces in the inferred category. The project also holds substantial copper resources, totaling 19.4 billion pounds in the M&I categories and 38.5 billion pounds in the inferred category. Resource and reserve architecture. The geological complexity and scale of KSM allow for a staged development approach. The current development plan is based on a 2022 preliminary feasibility study, PFS, which focuses exclusively on an open-pit operation for the Mitchell and East Mitchell deposits. This study outlines a robust 33-year mine life with favorable economics, driven by significant copper and silver byproduct credits that drive the gold production costs into the lowest quartile globally. The project's proven and probable reserves currently stand at 47.3 million ounces of gold, 7.3 billion pounds of copper, and 160 million ounces of silver. Beyond these reserves, the broader mineral resource inventory is extensive. Gold resources include 88.3 million ounces measured and indicated and 71.5 million ounces inferred. Copper resources include 19.4 billion pounds M&I and 38.5 billion pounds inferred, and silver resources include 414 million ounces M&I and 239 million ounces inferred. Additionally, the project contains molybdenum resources of 211 million pounds M&I and 148 million pounds inferred. The reserve grade at KSM is notable for a project of this scale, particularly when accounting for the total metal value per ton. The 2022 PSF projects an average annual metal production of 1 million ounces of gold, 178 million pounds of copper, and 3 million ounces of silver over the initial 33-year mine life. The underlying geological model indicates that the Kerr and Ironcap deposits, which are currently excluded from the PSF mine plan, offer significant potential for underground block cave mining that could extend the project's life for decades beyond the initial 33-year period.
Engineering progress and infrastructure development. Throughout 2025, the company focused on completing the data collection necessary for a bankable feasibility study, BSS. This effort included the largest geotechnical drilling program in the company's history, involving 8,500 meters of drilling across 117 holes. This data is critical for refining the engineering designs for the project's massive infrastructure, including the tailings management facilities and the Mitchell Treaty Tunnels, MTT. The MTT is a critical component of the project's design, consisting of twin 23-kilometer tunnels that will transport ore and supplies between the mine site and the processing facility. The Treaty Creek Terminal, TCT, switching station, which will connect KSM to the BC Hydro Northwest Transmission Line, saw the completion of earthworks, concrete foundations, and steel erection in 2025. Strategic reorganization, the Valor Gold spinout. In December 2025, Seabridge announced a significant pivot, the planned spinout of its 100% owned Courageous Lake Gold Project into a new standalone company named Valor Gold. This move is intended to unlock the value of a Tier 1 gold asset that management believes is currently overshadowed by the sheer magnitude of the KSM project. Under the proposed plan of arrangement, Valor Gold shares will be distributed to existing Seabridge shareholders and listed on a major public exchange. Valor Gold will have its own dedicated management team and board of directors, allowing it to focus exclusively on advancing the project through exploration and permitting.
Courageous Lake Project Fundamentals. Courageous Lake, located in the Northwest Territories, is one of Canada's largest undeveloped gold projects. The project contains 11.0 million ounces of gold in the MNI category, at an average grade of 2.36 grams per ton, making it one of the higher-grade open-pit projects in the country. In February 2024, Seabridge released an updated PFS that demonstrated a vastly improved economic profile compared to previous studies, primarily due to a redesigned mine plan that significantly reduced initial capital requirements. The 2024 PFS outlines a 12.6-year mine life with an average annual payable gold production of 201,000 ounces at an all-in sustaining cost, AISC, of $999 per ounce. At a base case gold price of $1,850 per ounce, the project demonstrates an after-tax NPV, 5%, of $523 million, with an internal rate of return, IRR, of 20.6% and a 2.8-year payback period. In a high-price scenario of $2,500 per ounce, the economics improve substantially, with the after-tax NPV increasing to $1.13 billion and the IRR rising to 38.2%, while the payback period drops to 1.6 years. The initial capital expenditure for the project is estimated at $747 million. The 2024 PFS mine plan utilizes a 7.5 ton per day processing plant and focuses on mining 33.9 million tons of proven and probable reserves. A separate preliminary economic assessment, PEA, released concurrently, evaluates a conceptual expansion of the project that could extend the mine life to nearly 16 years by incorporating additional inferred resources.
District potential and exploration upside. Beyond the main deposit, the Courageous Lake land package covers approximately 500 square kilometers, of which less than 15% has been explored to date. The project includes the Walsh Lake satellite deposit, which hosts an inferred resource of 555,000 ounces of gold at a grade of 4.18 grams per ton. Valor Gold intends to implement a targeted drilling program to identify additional satellite deposits analogous to Walsh Lake, which could further improve the project's economics and extend the potential mine life. Exploration pipeline and the Iskut discovery. While KSM and Courageous Lake provide the company with established resource bases, the Iskut project has recently emerged as a primary growth engine. Located just 20 kilometers east of KSM, Iskut possesses geological signatures similar to the Deep Kerr deposit. Snip North Porphyry discovery. The 2025 exploration program at Iskut was focusing on the newly discovered Snip North copper-gold porphyry system. The program completed 24,225 meters of diamond drilling, significantly expanding the footprint of known mineralization. The results confirmed a large, robust porphyry system, characterized by consistent gold and copper grades over extensive intervals. Notable intercepts from the 2025 campaign highlighted the scale of the system, including hole SN-25-30, which returned 820.0 meters at 0.66 grams per ton gold and 0.14% copper, and hole SN-25-42, which intercepted 719.0 meters at 0.60 grams per ton gold and 0.06% copper. Other significant results included 598.4 meters at 0.49 grams per ton gold, SN-25-43, 555.7 meters at 0.44 grams per ton gold and 0.13% copper, SN-25-39, and 538.9 meters at 0.52 grams per ton gold and 0.13% copper, SN-25-34.
Mineralization at Snip North is now defined over a strike length of 2,100 meters, a dip projection of 600 meters, and a width of up to 700 meters. The geological modeling suggests the system is plunging to the northwest and remains open at depth and along strike to the north and west. Management has signaled high confidence that a significant maiden resource estimate will be achieved for Snip North in the first quarter of 2026. Secondary exploration assets. The company's exploration strategy extends to the Yukon and Nevada, focusing on district-scale opportunities. 3 ACES, Yukon. This 314 square kilometers property is a district-scale, high-grade orogenic gold system. The 2025 exploration program, which included 3,000 meters of drilling, sought to further delineate near-surface, high-grade gold zones. Snowstorm, Nevada. Located at the intersection of 3 major Nevada gold belts, Snowstorm is contiguous with several of the state's largest gold mines, including Turquoise Ridge. In 2025, the company focused on a CAD $1.8 million geophysical program designed to refine deep drill targets in this highly prolific region.
Balance sheet analysis. The balance sheet of Seabridge Gold is a reflection of its unique business model, which involves carrying massive, non-producing mineral assets while funding development through innovative, non-dilutive instruments. Asset valuation and mineral interest investment. As of September 30, 2025, Seabridge's total assets were reported at approximately $1.71 billion. This asset base is dominated by mineral interests, which represent the cumulative investment in its projects. The rate of investment accelerated significantly in 2025 as the company pushed toward partnership readiness for KSM and expanded the Iskut discovery. Quarterly investment grew from $12.6 million in Q2 2024 to $21.1 million in Q2 2025, a 67.5% increase, and from $28.1 million in Q3 2024 to $52.9 million in Q3 2025, an 88.3% increase. This increased capital deployment is primarily allocated to geotechnical drilling, the BC Hydro TCT station, and the massive exploration campaign at Iskut. The investment is categorized as an asset on the balance sheet, as these expenditures are expected to generate future economic benefits through project development or sale. Liquidity and working capital management. The company has maintained a strong liquidity profile despite its high burn rate. Net working capital stood at $83.2 million as of September 30, 2025, a significant improvement from the $37.8 million reported at the end of 2024. Liquid assets include US $79.9 million in cash and equivalents, providing a buffer for near-term costs. The company's current ratio of 2.99 indicates an ability to cover short-term obligations, while its debt-to-equity ratio remains moderate between 0.55 and 0.57, largely influenced by the secured note liabilities. While the current liquidity position is healthy, some analysts have noted a potential crunch if the company fails to secure a partner or additional financing by mid-2026, as the quarterly investment in mineral interests and general administration continues to draw down cash reserves. The secured note liabilities. The most complex and significant portion of the Seabridge balance sheet is its long-term liability related to secured notes. These instruments were designed to fund the substantially started work at KSM without diluting shareholders during a period of lower equity valuations. 1. The 2022 USD $225 million note, Sprott and OTTP. This note matures on the earlier of commercial production or the 10-year anniversary of its issuance. At maturity, the principal repaid is used to purchase a 60% gross silver royalty on the KSM project. The note carries a 6.5% annual interest rate, which can be paid in cash or common shares. If commercial production is not reached within 10 years, the royalty increases to 75%. 2. The 2023 USD $150 million note, Sprott Streaming. Structured similarly, this note is repayable at maturity via a 1% net smelter return, or NSR, royalty on all metals produced at KSM. It also carries a 6.5% interest rate. Seabridge has the option to buy down the royalty 2.5% after commercial production is achieved, subject to providing the investors a minimum guaranteed return.
Accounting treatment and Level 3 remeasurement. Under IFRS, these secured notes are classified as financial liabilities and are remeasured to fair value each quarter. Because the royalties depend on future production and metal prices, they are valued using Level 3 inputs, which are the most subjective in the fair value hierarchy. The inputs for these models include forecasted metal production, gold, silver, copper, molybdenum, future metal prices derived from quoted futures, risk-free rates and credit spreads, the estimated timeline to commercial production. The remeasurement process creates significant volatility on the income statement. For example, the $12.3 million net profit in Q2 2025 and the $32.3 million net loss in Q3 2025 were primarily driven by non-cash changes in the fair value of these note liabilities, rather than operational performance. Management notes that these non-cash swings have no impact on the company's ultimate obligation, which is the delivery of the royalty at maturity. Equity structure and shareholder base. Seabridge has maintained a relatively tight share structure for a development stage company of its size, with approximately 104.3 million shares outstanding as of late 2025. Institutional ownership is high, at approximately 57% to 59%, indicating significant backing from long-term professional investors. Insider ownership remains at roughly 2.4% to 2.5%.
In February 2025, the company raised $100 million through a combination of a bought deal offering and a strategic private placement. This financing was to fund the 2025 work program at KSM. Additionally, a CAD $30.5 million flow-through financing was completed in June 2025 to fund the exploration activities at Iskut and 3 ACES. Cash flow analysis. Deployment of development capital. The cash flow statement of Seabridge Gold reveals a company aggressively deploying capital into its asset base, while relying entirely on external financing for its operations. As a pre-revenue company, the burn rate and the efficiency of capital deployment are the most relevant metrics for assessing management's performance. Operating and investing cash flow. Operating cash flow for the trailing 12 months ended September 2025 was approximately negative $7.29 million, primarily driven by G&A expenses, interest payments on the secured notes, and legal fees associated with defending KSM's permits. The primary cash activity occurs in investing, with total capital expenditures for the 12 months ending September 2025 reaching $83.2 million, leading to a negative free cash flow of $91.86 million. In the third quarter of 2025 alone, the company invested $52.9 million in mineral interests, specifically for geotechnical work at KSM and drilling at Iskut.
Financing cash flow. To bridge the gap between negative operating cash flow and massive investing requirements, the company utilized several financing sources in 2025. A major bought deal and strategic private placement raised approximately $100 million for KSM feasibility data and TCT construction. This was supplemented by CA $30.5 million in flow-through shares for exploration and a renewal of the company's $100 million at-the-market ATM facility. Furthermore, a $750 million base shelf prospectus provides the legal framework for potential future multi-year financing. The relationship between investing and financing cash flow is the defining characteristic of Seabridge's financial management. The company effectively converts equity capital and royalty-based debt into in-ground assets. Success is measured by whether the value of the assets, KSM, Courageous Lake, Iskut, grows faster than the cost of the capital raised to develop them. Valuation analysis. Valuing Seabridge Gold requires a shift away from earnings-based multiples towards asset-based methodologies. Because the company has no revenue, analysts primarily use net asset value, NAV, enterprise value, EV, per resource ounce, and price-to-book, PB ratios. Net asset value, NAV methodology. The most common valuation method for advanced stage developers is the DCF-based net asset value. This involves modeling the projected cash flows from the project as defined in technical studies and discounting them at a standard rate, typically 5% for gold projects in Tier 1 jurisdictions.
The 2022 PFS projects an after-tax NPV, 5%, of $7.9 billion for the open-pit phase of KSM alone, suggesting a standalone value of roughly $75 per share based on 104.3 million shares outstanding. For Courageous Lake, the 2024 PFS projects an after-tax NPV, 5%, of US $523 million at a gold price of US $1,850 per ounce, which increases to US $1.13 billion at US $2,500 per ounce. The spin-out of Valor Gold is specifically designed to realize this estimated US $5 to US $10 per share in value that management believes is currently lost in the Seabridge corporate structure. Stonegate Capital Partners applied an EV/NAV range of 0.6x to 0.8x to the combined assets, resulting in a valuation midpoint of US $50.06, indicating the stock trades at a 40–50% discount to its risk-adjusted asset value. Enterprise value per resource ounce. A simpler, more direct comparison involves the takeover or replacement value of the in-ground metal. Seabridge is ranked among the world's top 10 companies in gold reserves, yet its valuation relative to its peers is significantly lower. The company currently holds a market capitalization of approximately US $3.1 billion and an enterprise value, EV, of US $3.44 billion. This enterprise value equates to roughly US $34 per ounce of gold in the measured and indicated categories, or US $0.18 per pound of copper if the gold value is set to 0. The company's price-to-book ratio is currently recorded between 3.44x and 4.08x, reflecting a market premium for its mineral assets compared to historical book value.
The enterprise value of US $3.44 billion covers nearly 100 million ounces of M&I gold and 19.4 billion pounds of M&I copper. This discount is often attributed to the high initial capital requirements of KSM, $5.3 billion, and the time delay to production. Sensitivity analysis and peer comparison. Seabridge offers a leverage to the gold price, as its NPV increases non-linearly with rising metal prices. For example, the after-tax NPV of Courageous Lake jumps from $523 million to $1.13 billion, as the gold price rises from $1,850 to $2,500 per ounce. Analyst perspectives as of late 2025 remain divided between fundamental asset value and current performance metrics. B. Riley Securities maintains a buy rating with a $65 target price, while Stonegate Capital forecasts a midpoint target of $50.06. Conversely, quantitative ratings from firms like Zacks Research and Weiss Ratings have issued strong sell or sell ratings, largely due to the company's negative earnings per share of negative 0.37 cents and lack of current revenue. While Seabridge's P/B ratio of 4.2x is higher than the Canadian metals average of 3.0x, it remains substantially lower than the 15x average of its closest peer group of advanced-stage developers.
Risk and strategic outlook. The primary catalysts for Seabridge in 2026 are the resolution of its legal challenges and the formalization of a partnership for KSM. Partnership dynamics and capital risk. The company's stated goal is to retain a significant portion of the working interest in KSM while minimizing its own capital contribution to construction. Management missed its self-imposed end of 2025 target for a JV announcement as potential partners completed final site visits in Q3 2025. The delay is largely attributed to the complexity of the due diligence process and the preference of major mining companies to wait for the final feasibility data collected during the 2025 geotechnical program. A formal partnership announcement remains the single most important upside catalyst for the stock in 2026. Judicial and regulatory risks. The Q1 2026 decision regarding the substantially started designation is a binary event. A positive ruling would permanently secure the project's environmental permits and remove a major overhang for prospective partners. Conversely, a negative ruling could force the company to reapply for environmental certificates under new regulations, potentially delaying the project by several years.
Operational execution and exploration growth. The transformation of Iskut from a secondary exploration target into a second KSM following the Snip North discovery has significantly increased the firm's value per share. The Q1 2026 maiden resource estimate will be a major milestone, potentially adding several million ounces of gold and substantial copper to the company's inventory. Conclusion. Seabridge Gold enters 2026 with several near-term milestones that could close the significant valuation gap between its current market price and its net asset value. The combination of the KSM project, the high-grade Courageous Lake project, and the emerging Snip North discovery provides multiple avenues for value creation. Seabridge's non-dilutive note financing has preserved the upside for common shareholders, but also necessitates a clear path to a partnership to fund the ultimate construction of its flagship assets.